Welcome, everybody. Today we are live trading micro gold futures. We're going to be walking through setups, the patience, the execution, the thought process in real time. And so if you're joining us live, if you're tapping in while we're live, let me know where you're watching from. I want to see who we got on these lives. And let's get into it. So I'm gonna share my screen. Excuse me. So you see, I'm trading my 50K Top Step Trading Combine. Took one trade overnight last night. Well, it wasn't overnight. I actually closed it, but it was in the middle of the night. I closed it right at this area right here. So I was in a buy, and price invalidated me at this decision making level. Price invalidated me at this decision making level right here. So I closed right on this candle right here. Right when I got that invalidation, right? I didn't wait to see what would happen, if it would come back up. I wasn't hopeful. I just exit the trade, cut the cord, right? Trade management is just as important as the execution. I was thinking about that last night. Like, there are so many ways that we can develop as traders. We of course can't master everything, but we can master our execution. We can master our system, right? We can master our patience. We can develop. Never reach a peak, right? We can never reach a peak with those things. And so I've referred to this before as perpetual mastery. It means you just keep on increasing your level of masterfulness. It's not a word, but um, hopefully that articulates what I'm trying to get across. And I need to turn my light down, but it doesn't go down. So that's fine. It's fine. But yeah, so I have not done my weekly micro macro gravity scan. So I'm actually going to do that right now. There's something I have on the screen. If you can see it, it says I learned it already. It was last night. I don't know if anybody else's brain does this, but when I go to sleep, my brain just starts going. And so I was just thinking about so many different things that um, really just sending everything business related, things with, this business, trading, with my 9 to 5 job. Like, I was just thinking about all these different things. And one of the things that I was thinking about was when it comes to, where is my prompts at? When it comes to, there they are, the macros. Right? When it comes to the macros, it's overwhelming at first, right? Because it seems like there's a lot of information, right? But once you learn the macros, the reason why I learned it already. Once you learn the macros, it makes it really simple to stay up to speed with what's going on. And so the reason why I learned it already is because at this current stage, the amount of intention that we've placed on understanding the macros, right? We can get brought up to speed really quickly by simply reading an article, a handful of articles, and really just understanding the key points. And the reason why I learned it already there is because I don't need to spend time learning why whatever macro factor I'm looking at is important because I learned it already, right? That doesn't mean I know every single thing, every single macro driver that I read about doesn't mean I know every single one. But what it does mean is I have the ability to understand it much quicker because of the things I've already learned when it comes to the macros. And so I say that to say, not to say, oh, Marcus, you know everything about the macros. Like, no, that's not the case. I say that to say, once you do begin learning the macros, it makes it easier to learn even more about the macros. That is the point I want you to understand is the more you learn, the easier it becomes to learn the macros. And so I'm gonna do I've gone through this before. I had no problem going through it again, but let me put this prompt in here first really quick. All right, run this prompt really quick. But I have my prompt ready to go. I've already showed you guys that. I'm using Gemini right now because I like the way that it conducts real live research, like real time data research. And then I'm gonna gather that. I'm gonna export that to my Google Docs, and then I'm gonna incorporate my Notebook LM, and I'm gonna have it give me the key points from that article, right? But like, I don't need to spend time reading line by line everything because I've learned it already, right? And so I'm able to just get that. I'm able to get brought up to speed based on the key factors. A couple months ago, 6 months ago, yes, I would read line by line. I would really try to understand, not try. I would really put my intent on understanding what is important here, right? Why is that important? Okay, why does that impact that? Okay, what happens if it does this instead? And what does this say about that? Right? Like I'm going through those scenarios, right? I've gone through those scenarios to deepen my understanding, right? So I just didn't keep it surface level, right? Um, so I'm gonna let that run. In the meantime, I don't believe we have any news today. Um, we don't have any news today. The main thing news this weekend or this week is Wednesday. We got the Fed funds rate. So, if we pull up I'm so glad that you guys cannot see my tabs because I have a million tabs open. It's insane. Um, but if we look at the CME Fed Watch tool, which these are the current market expectations for no rate cut or 25 basis point rate cut. And I think we can all agree to say we pretty much know what's going to happen tomorrow, right? Why can we say that with high probability? Because only 4 times, I'm going to say it again. I have to say it every single time. Only 4 times has the Fed, I'm not going to say only 4 times. 4 times since 2007 has the Fed done something different than what the market has expected. Okay. So Fed funds rate tomorrow, and we can almost bet with certainty, not bet, don't go out and place any bets, guys. I mean, at least don't do it because of I said that word in there, you know. But we can place a high level of certainty, high level of probability on the fact that we don't get a basis cut at all. We have the economic projections, which is always good for understanding what the Fed is looking at long term. The FOMC economic projections puts one of the things that they put on there is a dot plot, and this dot plot says, okay, this is where we see, like, not just one person of the FOMC, but it's all the different Fed members that contribute to this dot plot. And within that dot plot, it visually shows this is where collectively the Fed sees the rates over the course of the year 2027, 2028, 2029, right? They like project where the rates, where they see the rates at based on the current, past, and speculation of future economic activity or lack thereof when it comes to inflation, when it comes to labor market, when it comes to trade balance, right? When it comes to those things, right? They're interpreting the health of businesses, manufacturers, producers. They're determining the hourly wage growth, right? So, are people making more money per hour than they used to, right? Are people spending more? Like they're looking at the fundamentals. To They're looking at the current fundamentals, past fundamentals, and then they're also able to use the data to look at and project future fundamentals, right? Now they're not always going to be right. There are very few times they're going to be spot on, right? There's going to be some um what's what I'm looking for. There's going to be just some discrepancies in how they speculate the future, and there will be multiple different perspectives. Like not all Fed members will see things the same way. So this is always a good thing for us to be aware of. Um Something that you can easily download a PDF version of and throw it into ChatGPT and have it, like, really walk you through understanding, if I was an investor, if I was a member of the Fed, how should I interpret this economic, projections PDF, right? Just ask ChatGPT that. What are some key things I should be looking at to be able to understand how this economic projections could impact gold going forward, right? Like this, I love using AI ChatGPT as just a think tank, right? A think tank. I don't let it think for me. It does help me generate new ideas, um, but I'm very conscious in making sure that it is not doing the thinking for me, right? It'll come up with good follow-up questions, things like that, but it's not gonna do the thinking for me, right? So we got that on Wednesday, or yeah, we got that on Wednesday. The FOMC statement, which is just the statement of the release of the Fed funds rate. They kind of just go through. Um, it's almost like a kind of look at it like an executive summary in a way. Um, because they're presenting that FOMC statement with the Fed funds rate, kind of talking about present and past, and then they're releasing the FOMC economic projection. Sorry, I didn't share my screen. They're releasing these two kind of together, and they're releasing this regarding the future, right? So these are past and present. This is more future. But then we also have PPI that same day. So this will be a this will be a very heavy morning, and it could really go one of two ways. I mean, that's pretty much It could always go one of two ways. Actually, it could always go one of three ways. It could always buy, sell, or consolidate. But with this on tomorrow, it can go one of two ways. It can be really aggressive in the movement, or it can be really rangy in the movement, just sideways, choppy, right? Typically, just from my historical observations, that's how heavy news days goes. It either ranges or we get really strong trending movement. But nothing too crazy from a news sense today. So that is good for us. Let me see if my gravity scan is ready. No, it is not ready yet. Love this too, by the way. Like, come on, just look at this. Look at these sources that it's going through. It's going through Fed sources, right? It's going through investing. It's going through finance. I don't really like that it's going through Wikipedia, but it's going through Wikipedia there because of the Strait of Hormuz. But yeah, it's working. Some more articles down here. It's going through some more articles. Like all these sources that it goes through, it's insane. But we'll keep that cook. We'll keep letting that cook. If you guys are trading this morning, let me know what you're trading in the comments. Let me know what you're trading in the comments. You know that we're always trading gold. We're always trading gold. Get a drink of my water real quick. My lady also got these new protein drinks by Slate. Shout out Slate. I really like that name. Honestly, like that's a cool name for a company. Slate. 30 grams of protein, 1 gram of sugar, no seed oils. Honestly, I thought it was a coffee. It says milkshake, high protein milkshake, but there's no shake about this. Like this is like a drink. It's not. It's straight liquid. Like when I hear shake, come on, give me a shake. Which it's in a can, so what could I expect? It's good though. It's good though. I'm gonna blow my nose real quick, and I'll be right back. Don't miss me while I'm gone. Appreciate me while I'm here. All right. You guys should feel really special because I was thinking about you guys last night. Like I care about you guys. I was thinking about you guys last night. You see what that says? It says go over on live. Because when I was looking at the charts last night before I took my trade that I took, right, I had these levels. And I wanted to remind myself to go through this because if I'm on this live session, I'm gonna talk about decision-making levels. Like, come on, we just gotta talk about it. We gotta talk about it. If I don't talk about it, you guys might forget. You guys might forget. So I gotta remind you. All right, so look at this. Right, look at this. Look at this. So I'll preface this by saying the more you see the charts, the more you start to recognize patterns. Okay. We don't we don't place any um learning initiatives on candlesticks, on candle structure. So like I don't I don't really care about every single high and every single low. Like I don't really care about those things. I don't care about every single equal high, every single equal low. When I execute my entries, I don't care about break of structures, right? Why don't I care about it? Because for me, there is so much ambiguity on which level I should choose, right? And I don't like that. Like, I don't like when there isn't any, like, I don't like when I can't repeat something and repeat it over and over again because it's like, okay, well, maybe this is a higher, this is the equal, you know what I'm saying? Like this, like just look, this perfect example, right? Let's look at this right here. Let's look at this right here. We can agree. Why is that not deleting? We can agree that this, we can agree that, see, this is the funny thing. Is this an area of equal highs, or is this an area of there hasn't been a break of structure yet, right? Because if you're looking at this, none of what has happened after it has broken this structure, right? But for me, I'm interpreting this as ranging price action. This is price action is consolidating. It's choppy. Some traders may interpret this as still being supportive of a downtrend because we haven't broken structure. We haven't broken this structure, right? And so it's like freaking tomato potato. That's not even tomato tomato. It's like I don't know what to trust. Do I trust that we're in a downtrend, or do I trust that we're at an area of equilibrium? And I can easily mitigate all of that brain traffic with decision making levels. Easily. Easily, I can mitigate that brain traffic with decision making levels. Because what do I see here on the 1 hour chart? What do I see right here? 1, 2, 3. What do I see right here? 1, 2, 3. And then I have a 1, 2, 3. I see 3 decision making levels right here. So what does that tell me? Ooh, that tells me, okay, I really like that area. That's what that tells me. That tells me that is a very strong area of decision making. I don't have to bog my analysis down and get analysis paralysis over trying to figure out if this are equal highs or equal lows or equal, or I just don't have to worry about it because I'm using my decision making levels to communicate to my analysis what price is saying, right? I'm able to use decision making levels to understand what price is saying, right? Of course, it's not literally saying anything, but in terms of what price structure is saying, I'm able to use my decision making levels to do that. Okay. And so over here, right? Yesterday, before I made this one, let's delete that because I didn't make it yet, but I wanted to put it there and remind myself. And so I was like, okay, I got my setup. So this is my setup right now. This is my setup right now. I'm looking for this right here. I'm looking for buy above this level, dude. This top step, it keeps locking. Oh, that's why. Oh my gosh, I'm so glad I figured that out. Um, Never mind. Anyways, but I'm looking for a buy at this level, stop loss. Pretty much the same trade I took last night. Same trade I took last night. I was looking for a buy right here. I took my buy on that candle, this bullish candle. My stop loss was at the break of this 1 hour decision making level. Take profit number one, imbalance. Okay, that's my this is what I'm looking for right now today. If I don't get this today, you will not see me take any trades unless I pull up this macro gravity scan that my Gemini put together for me, and I interpret something that says, okay, gold is no longer in a safe haven demand because of X, Y, and Z. If I look at my research and that is true, I will look for sell opportunities. If I look at my research and what has been true regarding gold being a safe haven demand, being in a current risk off environment, then I will only look for buys. Okay. I'm only going to trade with the fundamentals. Only. No exceptions. Why? Because I want to protect my I'm not gonna say protect my capital actually. I want to increase my probabilities. And we know as traders, we can't execute on 100% of every opportunity. So if we are executing on 100% of all the opportunities, we take a buy when the opportunity presents itself. We take a sell when the opportunity presents itself. We're just going back and forth. We're trying to capture every opportunity, and it's mathematically going to decrease the probabilities that we will profit from a trade. It's literally just math because it is a game of probabilities. And I'm just going to leave it at that. It's a game of probabilities. Mathematically, you will increase your probabilities by trading with the fundamentals, or you will decrease your probabilities by trading against the fundamentals. That doesn't mean that you won't profit from trading against the fundamentals. That just means you are applying a greater level of risk by simply trading against the fundamentals. And the more risk you have, the lesser the probability. Like I tend to associate high risk with lower probability, because anything that's a low risk, it's low risk because it has a higher probability. You know what I'm saying? Not low risk just from a dollar standpoint, but just because it has higher probability, right? So that's what I'm looking for. I'm showing you what I'm looking for right now, specifically on buys, because I still need a moment to validate the current fundamental landscape of gold. Okay. And so this is take profit number one. As we move to this level, we feel this imbalance. I'm going to be monitoring to see what price does at this level. Okay. Because if price consolidates, I will close my profit. I will collect my profit. I'll have a trailing stop loss, and I'll collect profit. However, if price continues to move upwards, I will scale in. I will enter another contract. And my next target will be this 4-hour area of imbalance, which happens to lie right on this decision making level, which is not a coincidence, by the way, right? It's not a coincidence that this area of imbalance is right below a decision making level, because I'm going to show you guys another example right here with this area of imbalance that is right below a decision making level. Okay. So that's what I'm looking for as far as buys go, right? And so last night when I was marking that setup up, I was looking at this area right here. And so once you spend enough time on the charts, it's strictly, guys, I can't emphasize this enough. It's all about repetition, volume times time. VXT. Remember those 3 letters. Remember what the 3 letters represent. Remember what the whole represents. Volume times time. The more you see price, decision making levels, indicators, imbalance, the more you see those things, the more questions you will ask regarding price structure. So, like this area right here, we can agree that this area of price is important, right? Why is it important? Because it has these 2 levels, right? We sold off, pulled back, sold off, respected that low there, pulled back to this level, and we sold off some more. The second time we sold off, we created this area of imbalance, right? So we can say this is an important area. Like, and when we think of decision-making levels, the reason why I love that name is because it articulates what I'm trying to understand. It articulates exactly what I want to understand. Did sellers make a decision, or did buyers, or did no one? Did they make a decision evenly? Did they evenly distribute their decision-making, buyers and sellers, right? And so just looking at price structure, I can understand that sellers made the decision, right? But now I need a validator. I need something to come in and validate what I'm interpreting from just observing price structure. I need something to validate that I'm seeing that correctly, that I'm seeing that this is an important level. That's where my decision making levels come in, right? And so we don't have anything at this level of price. And I'm on the 1 hour, right? We don't have anything on the 4 hour of price, right? But on this 1 hour, if I go to the left a little bit, there's this old saying I used to hear. I forgot who I used to watch back, probably like 5 years ago with trading. But there's a saying that goes, look left to get right. Okay, look left to see what's going on the right hand side. Like, look left to get right. And so if we look left, I see decision making levels all over the place, right? So we have decision making level, we have decision making level, we have decision making level, we have decision making level. Okay. Now, if you've heard me on these lives before, the more decision making levels I have in one area, the more confident I am about that being a strong, important level. Okay. It's a strong level. The more we have this, like if you just look, like, okay, this was the first decision making level that was created. Like if we just look at price from let me get, just don't worry about any of this. Just don't worry about any of this. Right? Don't worry about it. It's gone. It's not there. 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 Anyways, it's not there. Just pretend it's not there. Pretend you can't see it. This was the first decision-making level that was created. This was the second, and this was the third. After this one, price didn't come back to this level, right? So price was literally playing around at this level prior to this last decision-making level, right? So who made the decision here? Buyers. Buyers made the decision to take price over at this level, right? Sellers made the decision here, sold off, respected, but then what do you see sitting right here? 1 hour decision making level, right? Sellers took it over. Boom, fell. Okay, price corrected, decision making level, range, decision making level, and then price took over from there. So in the present, when this was the present time, that was the decision making that went on. And even though that was past price action, that area of price can still communicate why this area is important, right? Because I have a decision making level, right? So that's where my 1 hour decision making level goes. Now, I could put my decision making level here. I could put my decision making level here, right? I could already have one up there, but I can put like, there's no absolutes for where you can put these decision making levels, because a lot of the time they're going to be around the same area, right? It's just about where you want. It's like, it's preference. After you understand what the decision making levels are for, it's preference. After that, it's preference. I prefer to have my decision making levels in this instance. I want to have a decision making level at this area, right? I want to have it at this area. And so I'm going to slide my 1 hour decision making level right there. And now it is perfectly between this area of imbalance, right? It's like, I just love that setup so much more, but it's above this area of imbalance. It's right at a strong level. Like, it's right on that area where we saw this sell off, correction, harder sell off. Like, it's right on that. So that's what I kept up here to show you guys, is how we can simplify price action and the way the candles look with decision making levels. That's what it does. That's literally what it's for. It's to simplify price action. It's to simplify it. It's to simplify it. There's I was when I was on the charts last night, I was just like looking. I was on the 5 minute, my execution time frame, and I was just watching price action. And it would be really frustrating if, as a trader, I was focused on candlesticks. Like, it would just be frustrating. Like, it doesn't matter which time frame. It doesn't matter which time frame you're on. It would just be frustrating because it's just so much to follow. Like, it's just so much to follow. You're looking at every single movement of a candlestick and then waiting for the candlestick to close to determine, is this a doji? Is this a hammer? Is this a dragonfly? Like, you're looking at thinking about all these different candlestick patterns. You're trying to decipher which candlestick it is. You're like, oh, wait, actually the wick is too long on this one, so it can't be that. But the body's not long enough, so it can't be that. Like, you know what I'm saying? It's ridiculous. It's ridiculous. Makes it too complicated, right? So how can we simplify price structure? Decision-making levels, period. All right. So I like what we're getting right here. I have no news, right? I have no news coming in between me and my charts today, right? And so I'm looking for look, this is the trade I took last night. Literally, this is the trade I took last night. I entered on that candle. I got rejection, price consolidated all night between two decision-making levels. Like, that's the thing, guys. Dude, I gotta calm down. Let me chill a little bit. Because I can talk about decision-making levels forever. DMLs, I can talk about them forever. But there's not a coincidence. There's no coincidences in anything in life, and there's no coincidences in price. And so when I say there's no coincidence that price ranged in this decision between these decision-making levels, I don't believe that is by happenstance. I believe that I'm able to see price for what it is for it being ranging price action because of the decision-making levels. Right? Some traders may see sells in this area. I see a no trade zone. Right? Because we were playing in between these decision-making levels. But now, as we're moving upwards, I'm just looking for a break of this 5 minute of this decision-making level. And I'm going long. I'm going long. Shout out Tom Brady. I'm going long. Apologize for my nose, guys. I don't know, it's my allergies or something, but everybody gets the sniffles here and there. Don't judge me. I like what I'm seeing here. Fresh volume. All right, let's pull this up. Real quick. Let me export this really quick. Oh, dang it. I didn't mean to do that. Let me get this over to my notebook LM. These prompts have gotten so much better. Not the prompts, the outputs. And that's the beautiful thing about AI, guys. You know, I'm not an AI master yet. I do consider myself pretty proficient in the AI space. But the more you use it, that looks terrible. The more you use it, the more that it gets you trained on the way that you use it. All right, cool. I got that up. Let's go to Notebook LM. I'll show you guys this. I don't mind showing you guys this right here. Macro gravity scan as of 3/17. What are the main fundamental factors impacting gold? Boom, that's it. I don't need to give it a fancy prompt because it's only going to use my resources, right? It's only going to use my resources. So it knows everything about what I just said because it has my resources, right? And I'm only using, actually, pause that real quick. I didn't update it because I just put my macro gravity scan from today. It's not going to give me based on today. See, look, my current sources only go up to macro gravity scan from March 11th and 12th because I haven't synced my drive. And we're not getting a breakout yet. So now let that sink. My daughter is such an early bird, man. She gets up and she don't go back to sleep. Said, I'm up. I'm up, Dad. I ain't going back to sleep. Ooh, that's what I'm talking about. I can't even talk about this email that I just received, but I'm just gonna LOL. All right, so now let me try this again. Try it again. Same thing. I'll put the same thing in there. And one thing I like too is, even though Notebook LM, and I'm sharing this stuff with you guys because I got something, we got something, Q and I, that you're gonna love. All right, you're gonna love, and you're gonna be able to use Notebook LM if you have access to Notebook LM. If you don't, it's $20 a month. Get access. Right. I heard this saying. A couple weeks ago. Stop being cheap trying to get rich. Okay, $20 a month. Just cancel your Netflix. Stop buying Starbucks coffee. I go to McDonald's every morning. It's about $2.83 for my morning coffee. And so if I cut that out for 2 weeks, that would take care of my Notebook LM subscription or my Google One subscription. But I'm sharing all this because you guys will be able to use the same tools that we're using without having to do the front end structure. Like, we'll have the structure set up for you. Just go deploy it and then document it. Okay. And then learn it through Notebook LM. But one thing I like is it will give you populated questions to ask based on your current research that you have in there. So like right now, one of those questions it's giving me is, should I ask it, how does the DOJ's investigation of Powell affect gold? Like, to me, that's a logical question to ask, right? And I feel like I can answer that question. How does the DOJ's investigation of Powell affect gold while this is outputting? One of the ways that it could impact gold is indirectly. And what I mean by that is, because the investigation of Powell, and um, there's a lot of discussion around the lack of Fed independence because of that. And a lot of, let's just say the market investors rely on the independence of the Fed. And when I say the independence of the Fed, I mean it not being under the authority of executive branches, right? That's mainly the talk. Like, we hear, Trump calling too slow Joe, right? Too late Powell, right? We hear those things, and that's what it's coming from. That's what it's coming from. And now Kevin Warsh is going to be taking Fed Powell's place as Fed chair once his term is up. I believe this month. I believe it's this month, actually. Could be wrong about that, but I believe it's this month. But yeah, Kevin Warsh, who was, I'm pretty sure, on the board of the White House in some capacity, but is has closer ties to Mr. Trump than Powell did. Right. So when we talk about the lack of Fed independence, that is where it's coming from. And the lack of Fed independence creates levels of uncertainty. Right. It creates levels of uncertainty because the Fed has operated this way for so long, and now it looks like it's not operating in that way. So now trust is under attack, right? Credibility is under attack, and those things create uncertainty. Uncertainty drives the demand for gold, right? So that's my perspective to that question, right? That's what I interpret from that. Not getting anything on the charts yet. Look at this though. There's no coincidences, guys. So if you didn't use decision making levels, how would you interpret what happened at this area right here? Right? And that's an honest question. Like, if you have an answer, please put it in the comments, right? How would you interpret if you let's get rid of everything. Let's get I don't know what link is, but let's get rid of that. I've never seen that there before ever. Like, how would you interpret what happened if you didn't have this level here, right? How would you interpret what happened? Right? And I know the answer. It's going to be related in some capacity to structure. Like, it didn't break structure, or I don't know what you could say there, right? But I know it's in some capacity regarding this price action, right? But I don't even have to think about it. Me, in my analysis, I see that I get this wick, this rejection right off a decision making level. And I'm like, okay, buyers are not strong enough yet. Sellers stepped in. Easy. Boom. Done. Right. Pause. Now we just sit. We just sit and wait. Right. We just sit and wait. So let's see what we got over here. Treasuries has expanded significantly to 1.87. It's elevated because gold is a sterile asset with no yield. Dividend real yields approaching 2% threshold, create an insurmountable mathematics ceiling and prohibitive opportunity cost for institutional money managers. So this is just saying because yields are rising, it does put some downward pressure on gold, even though like we've seen gold and the yields rise at the same time as of late. But that is not the normal way that happens. Normally yields are up, gold's down, gold's up, yields are down, right? So that's what that's saying. Dollar dominance driven by systematic flight to liquidity, expanding sovereign yield differentials. The DXY has broken aggressively above the 100 mark. Wow. I was going to say its highest valuation since 2025 of May. Yeah. Because the international gold market is dollar denominated, this soaring greenback mechanically depresses gold's price and makes the physical bullion significantly more expensive for foreign buyers, destroying demand in emerging markets. Okay. So when I'm interpreting this from a technical standpoint, like the yields and the dollar dominance right now, to me, those are technical factors because fundamentally they have not been acting how they normally act from a fundamental standpoint. And that's what I just mentioned. When yields are up, gold is down. When dollars up, gold is down. To me, those are fundamental principles of the way yields, dollar, and gold act. Right. That's how I interpret it. You can interpret it totally different. That's fine. I'm just walking you through what's going on inside of my dome. Okay. Inside of my dome. And so let me make sure price is not doing anything. No, I got about 5 more minutes and then I feel like price is gonna start cooking. All right. So technically I'm bearish on gold. From a technical aspect, I'm bearish on gold. Remember, I said the gold thrives in two markets: fear and uncertainty, policy, right? From a technical aspect, I'm bearish on gold. From a fundamental aspect, I'm bullish on gold right now, right? So let me read some more and figure out if my bullish bias on gold fundamentally is up to date. Okay. And so we have the Strait of Hormuz blockade and energy driven inflation, the active kinetic conflict. And remember, kinetic was just simply types of attacks, military force, psychological, right? Remember, we talked about kinetic military attacks before, involving the US and Israel and Iran has led to unprecedented 97% plummet in commercial maritime traffic through the Strait of Hormuz. This supply shock pushed crude to an intraday high of $106, injecting a massive inflationary impulse into the global market. While the conflict embeds a $150 to $200 geopolitical risk premium into gold, that prevents an even deeper collapse. The resulting The resulting oil-driven inflation mechanically negates the Federal Reserve's ability to cut interest rates, which actively suppresses gold. Okay, so now we're getting into fundamental stuff. Like this is the Strait of Hormuz being blocked is a fundamental factor under geopolitical tensions. We'll call it global tensions, right? This line right here has to do with one of the two ways gold is impacted: fear and uncertainty and policy. This line right here has to do with policy because of even though the Strait of Hormuz being closed creates fundamental conflict, the impact of that fundamental conflict from an inflation standpoint impacts policy that is applied from the Fed, which then impacts gold prices. Okay. So based on this right here, fundamentally, I'm bearish on gold because of policy. We have policy tomorrow, right? But then we have to also forward think. We have to forward think with this stuff, because what the market does a lot is it prices things in. And what does that mean? It just means it's the price either rises or falls prior to what's being projected in the future. Okay, it prices it in, right? So fundamentally with this year, like I'm bearish on gold, right? All right, the March FOMC meeting and dot plot, tail risk. The Federal Reserve is holding a 2-day policy meeting, whereas it fully expected to keep the benchmark. Like we've already seen this, the expectations. The primary volatility catalyst for gold is the impending release of the Fed's economic projections. I mean, 1 second. I got a baby crying. Okay. Okay. Daddy kiss it? Daddy kiss it? Better? Give me kisses. Give me kisses. Give me kisses. Okay, fine. Can I put you down? Yeah. Okay. Give me kisses. You want a banana? Yeah. Okay. Let me get you banana. Here. Don't sit up there. Here. Eat your banana. Yeah. What do you say? Thank you, Daddy. You're welcome, baby. All right. One thing as a parent, man, when a baby start crying, it could be something super serious, or it could be something not very serious. In this instance, it was slightly serious. But moving forward, what it seems like from this is the summary of economic projections is what is in focus for gold, right? And so if the updated dot plot, this is so good, guys. This is so good to understand, and it provides such peace of mind when we're trading, because we're understanding of the climate, right? And so it says, if the updated dot plot projects 0 cuts for 2026 due to sticky inflation. Why is inflation sticky? Right? Because one of the factors being the Strait of Hormuz, right? If the updated dot plot projects zero rate cuts because of sticky inflation, it will trigger an immediate spike in 2-year treasury yields and force a cascade liquidation of leveraged gold positions, potentially driving the metal. So, like this stuff, I'm not super worried about. Like, I never really listen to anybody's price projections. I only listen to my decision making levels. And maybe I'm delusional, but this is talking about 4,800, right? Watch this. Watch this. So, in order to get to 4,800, let me see, 4,600 to 4,800, what does it have to go through? It has to go through my daily decision making level, right? And so after it gets through that, let's see. I just want to see if we have a decision making level at this 4,800 level, just to see, because I always challenge any projections that I see. I challenge it with my decision making levels. So 4,800. I didn't see one on the 1 hour. Let's see, 4,800. Ooh, look at this. 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 Right here. Look at this. Boom. Right at 4,830 decision making level. And I can find one 4,600. It's not. Mama, it's just a garbage truck, baby. It's just a garbage truck. Yeah, it's just getting the trash, baby. You're fine. I'm not gonna go into 4,600, but yeah, I don't pay a lot of attention to prices, right? That. But fundamentally, from a fundamental sense, I'm bearish on gold. I am fundamentally reading these two from this section here, thinking about the FOMC economic projections, right? What that could come out as, right? I'm bullish, right? So I'm going to be paying attention to what this economic projection says, and I'm going to monitor if there's zero rate cuts projected for this year, right? Which I assume there won't be. But we'll see. Physical market collapse, microstructural logistics have severely disrupted the physical gold market. Operations at the Dubai distribution hub are functioning at only 37% capacity due to regional airspace closures and missile threats, right? So when we think about stuff going on like it's going on right now, we don't realize how much is impacted in the background. Like, man, the distribution hub for the physical gold market is not even operating at half of its capacity right now. Okay. So what does that do for supply? That's the question I'm asking myself, right? All right. You want the rest of your banana? All right, you don't have to get down, but stop touching stuff, mama. That's the question I'm asking. What does this do for supply to gold? Right? No, pick up your banana on the ground right there first. No, pick that up on the ground first. It disrupts the supply. Right? I hope that's what you're saying. It disrupts the supply. If supply is disrupted, what does that do to price? Right? That's going to increase price. If supply is disrupted, that increases price. Right? The more supply, the cheaper the price. The less the supply, the greater the price. Right? Simple math, basic economics, right? So this logistical friction has caused a catastrophic drop in end user demand in India. Okay, so look at that. Because of this logistical friction, there has been a drop in demand. Okay, so now we're talking about the other side of the economics, supply and demand, right? We're talking about simple supply and demand. So supply is limited right now, but it's because supply is limited, it's reducing demand, right? Which is going to impact price negatively. That's going to cause price to come down, resulting in a domestic. Okay, so let me rewind. It's dropped the demand in India, which is the world's second largest consumer. That's a big one, resulting in domestic physical trading at a stark discount to the London benchmark spot level. I would basically look up what that is. This inversion entirely removes the physical demand floor that traditionally absorbs paper selling pressure during a crisis. Mm. So what that is saying is the inversion of supply and demand removes the demand floor. So when gold falls, there's a demand at the floor, and that's when it gets bought up, right? And what they're saying by this article here, this research, is that because of this inverted supply and demand, supply has been reduced and demand has fallen. Because of that inverted relationship, it has removed a demand at the floor, right? That traditionally absorbs paper selling during a crisis. So we're in a crisis, quote unquote, right? We're in a crisis. And so the traditional demand at the floor that we would see has potentially been removed because of the inverted supply and demand aspect. So that one right there, I'll say for me personally, puts me in a strong bearish bias fundamentally, right? Even though there's, like, I know the things that are going on, but that's why we have to kind of zoom in sometimes. It's important for us to not always be looking so up close to things, but it is also important for us to zoom in after we have the bird's eye view, right? And so that's what we're doing now. We're kind of zooming in. Like, we know the bird's eye view macro wise, fundamental wise. We know the bird's eye view of everything. And so now we're getting a little bit focused in on that bird's eye view, right? And then so the last one, the implementation of 10% global import tariffs and aggressive Section 301 investigations are fueling structural supply side inflation. Concurrently, the U.S. national debt has reached 38 trillion, expanding by 7 billion per day. While this mathematically guarantees long-term physical dominance, which is the ultimate bullish thesis for gold, the immediate massive supply of treasury issuance required to fund this deficit is driving term premium expansion and forcing real yields higher in short term, functioning as a headwind for the metal. Okay. So from a fundamental sense, I am more bearish on gold than I was at the beginning of this call. I'll say that, right? Gold being safe haven demand, with there being, uncertainty, with there still being just that dynamic, I still would not mind taking buys. I would still not mind taking buys, and I wouldn't feel like I was trading completely against the fundamentals, right? Because we just saw that the when it comes to tariff and debt, like that's a big factor of Khaled, put all those back. That's a big factor of the benefits it could have on gold prices, right? And then we also have something hovering over the market tomorrow with the FOMC, with the economic projections, with which could impact could benefit gold, right? If there are more than, let's say, 2 rate cuts projected in that SEP, that'll benefit gold, right? And so that one is just hovering over the market. There's no certainty because we don't know what the SEP is going to come out with, and that's the summary of economic projections, SEP. We don't know if that's going to come out with, okay, no rate cuts for 2026 or 10 rate cuts for 2026. Like we don't know. We don't know. It hasn't came out yet. It's hovering over the market for what the market is looking at, right? So we may run into a scenario today where we don't get anything because of what's coming tomorrow. We may run into a scenario today where we get some bullish activity, or we do get a strong bearish movement, right? But we've been consolidating ever since the market reopened. Honestly, we've been consolidating ever since March 13th. Like, can we agree that this is consolidation? Like, please don't be fooled or frustrated that you may have taken a trade somewhere in anything around here, and you weren't able to profit from it, right? Because from decision making level to decision making level, we're looking at about 30 points, 35, right? $350. I mean, profit is profit, but at the end of the day, this isn't a wide range for us to get some good movement going, right? Like it's literally been just chopping since March 15th, 13th, right? Since last Friday. You know what I'm saying? So we've been in this ranging price action, right? And so that could continue today. Or we could break out of here and fill this area of imbalance. Or, based on what I just read, we could sell off of this 1 hour decision making level, right? And I'd be looking for something like this. That's what I'd be looking for if we take sells. Because I'm up to speed now. Like I'm comfortable taking a buy or a sell because I'm up to speed, and I have fundamentals to come back to. Like I can tell you why I would be open to taking a buy. I can tell you why I'd be open to taking a sell. And it's not going to be technically related. It's going to be fundamentally driven, right? So that's important because I want to make sure that you guys know that when I'm saying don't trade against the fundamentals, right? Like when I'm sitting here telling you that I'm open to taking buys and I just said that I was fundamentally bearish, like you also need to know that there are, how do I want to phrase this? You just can't guess. Like we can't predict with certainty, but we can't guess blindly either. Right? We can't guess blindly. We can't just say I'm taking a sell, just take a sell just because technically it's being confirmed. Right? We have to have some fundamentals backing our decision making. So I didn't realize I was already over, 15 minutes or so on this live. So I'm going to close up shop here, start getting ready for work, get my things together. Um, Maybe grab a bowl of cereal. I came across this cereal brand at Fry's. There's none of the added BS in it, we'll call it for all the virgin ears watching. None of the BS in it. And they got Captain Crunch. But it's not by. It's funny because we call them Captain Crunch, even though they're like Crunch Berries. But like the cereal that I'm talking about, it's not by Captain Crunch. I don't know why I'm talking about cereal, but yeah, I just want to tell you guys what cereal that I like. And hopefully that, you're looking for some cereal that doesn't have any BS in it. And I'll be happy to tell you that it is Mama's Best Cereal or Mom's Best Cereal. That's the brand. Go get you some Mom's Best Cereal and you will not be disappointed. But other than that, we'll be back live on Thursday. We'll be back live on Thursday. Remember that you can always connect with us in our Bloom Circle community. There is a web app, there is a mobile app. There are multiple ways that you can stay connected with us through that. Both are really intuitive. I personally love the mobile app. Very easy to follow along with stuff on there, comment, ask questions, post pictures, videos, whatever you want to do in there. We'll be back live trading on Thursday. Remember, we'll have the SEP, Summary of Economic Projections, tomorrow. So we will be putting out it's kind of analysis and observation of that economic projections in our circle community. And remember, I do want to remind you guys that our community is completely free. We do have a paid side of our community where you become a VXT member, or you become part of our VXT community within our Bloom community. But if you're just joining, like, you can be with us as long as you'd like, right? And they're on our free side of the community. And we're always providing value no matter which side of the spectrum you are on. But I hope you guys got something out of this live session today. I know I did. As I was getting brought up to speed on the current fundamental climate for the market and gold. Um, but other than that, like I said, I hope that you guys got something out of this live session today. And Thursday we'll be back. And so I appreciate everybody that tapped in today. We didn't take a trade today, and that's totally okay. Um, we didn't pass on any trades because there were no opportunities for us. But we did read the market. We interpreted the market, past price action, current price action. We found our setups. We found what we were looking for. We found rationale behind it, right? We understand the risk. We understand the probability, right? We went through those things, and those part of the thought process is highly, highly, highly important. Um, and so the objective is always the same, no matter what the outcome that we get in the market or how we engage with the market. We want to first seek clarity, and then we want to execute. Right? We want to first seek clarity, and we want to execute. We have clarity right now. We're just waiting on the execution. We're being patient for the execution. And so I thank you for everybody that joined today. If you got value from this session, please like, subscribe, drop a comment. Show some love. Let us know that you do like these live sessions, so that we can keep doing them. Other than that, we will catch you on Thursday. See you guys later. Peace.